Gold, taking the support from my favorite 1954, has bounced back and it has come again till the greater resistance at 1975. And as we had discussed in our US session analysis, till 80-85 levels, gold has a very good resistance. At the same time, silver has seen a drop till 2310, but then on the upside, it has got a good support at 2310 and then has seen a bounce back and a recovery till 2360. Again, a very good number, again, a very good resistance. So what to expect today in gold and silver? Which position you should take in order to profit trading gold and silver? We will see with the help of charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the live market analysis. You can also join our free Telegram channel where you get the live updates. The link is mentioned in the channel and video description. Let's start. First, we'll look into gold followed with silver. Do watch till the end. Now see on the hourly charts, first of all, we had seen, gold has created bottom here, then the retracement, lower highs, then again a bottom here at 1954, consolidated here for multiple candles, then a retracement. In this sequence, it is done one thing, it is trying to create lower highs and a flat bottom. This is kind of a squeeze here which needs to be breached in order to confirm a rise. Now where it will get breached? Only and only if it trades above 1985 levels, then you can say it is trying to breach it, and then 1995 levels. Beyond that, it may try to hit 2005 and 2020 levels. So right now I will be looking forward for the day if it stays above 1980. Yes, that is a level above which you can stay long in gold. 1980 is going to be the level where you can take a long entry, where you can buy. Now look at this here on the hourly charts. Again here a wall, symmetry here, trying to look down. How far it can drop, where you should sell. Possibly once again, if you see it trading below 1970, you can sell. However, 1964, 1958 and 1954, very good support exists here. Now these are the levels you should note out. Now look at the stochastic on the hourly charts. It has dropped. MACD is creating a sine wave and this time it is trying to converge crossover for a sell entry. RSI is also trying to look down. And if you look at the 2-hour charts, now look closely on the 2-hour charts, flag top, second red candle. I'll wait for the third red candle which might take it. Now 1970 is a very good support, and if it trades below 1970, there could be little more bearishness taking it for 1964-58 levels, which is again a very good support levels. Stochastic certainly overbought, trying to look down here. The MACD also trying to converge. It is in green mode, it is in bullish mode. RSI is also trying to look down, trying to give a slight bearish indication. Now look at 3 hours. Now see one point here, 95, 85, or rather I'll say treat it as 90, 85, 80, 75. A $5 step it is creating. Consistently lower highs are done here. But at the same time, one more point one should note here is this is the levels at 1952, and see this is almost a double bottom it has created here. Hence it has become a very good support. Once it creates a double bottom, it increases the chance for it to achieve little higher levels, as this should be breached, and hence above 1980 certainly more bullishness may prevail, which might take it for 1990, 1995. In fact 2000 levels, 2005 levels cannot be denied if it stays above 1980-85 levels. Stochastic is seen rising. The MACD is still divergent and bullish. The RSI is almost flat. Now if you look at the 4-hour, on the 4-hour charts, here is a support from the 20 period moving average. Very good support exists in 1970 levels. What it can done here is, see, there is a resistance here. What it can do here is, see, first of all, look at the movement here. The drop, retracement, one bullish candle, retracement, a couple of bullish candles, lower highs trying to look down again. Hence, below 1970, again, we may see little more bearishness taking it for 1964, 60, 58 and 54 levels. Stochastic certainly overbought. MACD is still divergent and bullish. RSI is also almost converging here, but it is at a comfortable levels. Now look at the daily charts. Now look at daily charts and observe here. See, double bottom here is done. very long tail in the previous candle. Very long tail indicates that the prices failed to stay at a lower levels and have got a very strong up move. Thus after this there is increased probability that we may see a little bullish candle here, which might in fact take it on the upside. Hence we have to be watchful, cautious. 1980 levels, certainly 1980-85 zone certainly is going to be a fairly stronger resistance on the upside. Stochastic is seen rising. MACD is still bearish. See the bearish trend, then conversion, then bearish trend. Possibly it may converge again. Second crossover can be seen. RSI almost flat. Hence a good comfortable long entry at 1980 levels can be taken, and beyond 1980. See, till 1984-85 levels, one have to remain very cautious and alert. Only beyond 1984-85, we can say that the bulls are back. And then 1991, 2000, 2005. In fact, higher levels cannot be denied. Now, what it has done on the daily charts here is, see, it was divergent from the 20 period, divergent from the 20 period. Now, the 20 and 50 period moving average have started to converge. In fact, 50 period moving average is giving it a good resistance here, which is also in the 80-85 zone, and then the 20 period moving average. So we'll wait how it behaves here. Certainly moving averages have started to converge. And if you look at, see, the stochastic seen rising, and indicators we have already seen. Considering this, in between 70 and 80 do not trade. And also, if you are taking a sell entry at 70, be very cautious, alert till 1960 levels. It can reverse any point of time. The bearishness is not there till the time it stays above 1960 or 1958 levels. Only below 1958, it is going to give a little more bearishness. However, 1954, we have seen again a very good support. So as we saw in our weekly analysis, couple of levels we had mentioned that till 1950, the chances of the bounce back will exist, and that is what we are seeing. Below 1950, a stronger crash is expected, where we are going to see 1935, 1915 and below levels. Take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Now let's have a look at silver. And before we proceed, if you want to learn this art of trading profitably, you should join my mentorship batch. The 22nd batch starts on 5th of June. Register yourself, know itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. It is always important to first learn and equip yourself with the right tools, techniques and strategies so that you can understand market better. Identify the right trades at the right time and take profitable trades. Reach out to me for more details, and also you can do the same by joining our Telegram channel, Signals channel. Reach out for more details. Now look at silver. Now see silver on the hourly charts, a drop here, retracement, then lower lows, retracement, and it has come back to the same levels, which is 2360. 2360, very good resistance level. Also, if you look at, see, on the hourly chart, it was consolidating. This time it is trying to give a breakout. We may see it again. If it stays till the time, rather I will say till the time it stays below 2340, there will be increased chances for it to drop a little till towards 2320, 2330, 2320 and 2310. Till 2310, just 10 cents trailing stop loss. Below that, it is going to drop heavily. So yes, a sell entry below 2340 can be taken. There is bearishness, 2330 first, 2320 second and 2310 third. These three levels, and below that there is still lot much of ground to cover on the downside. We may see in fact silver sliding below 23 till 2280 levels. Now on the upside, a buy entry is only about 2360. Stochastic dropping, MACD trying to converge here. And crossover, it is not yet crossed over. RSI looking down, RSI trying to trade bearish. And if you look at the 2-hour charts, on the 2-hour charts also, now see increased probability. Look at the complete candle. Now it is trying to limit its movement within this. It means 2320 levels till 2320. It has got very good support levels. Stochastic looking down, MACD trying to cross over for a sell. Remember, it has crossed over at bottom. It can continue on the upside for a little while. RSI looking down, trying to show little bearishness. Now look at the 3-hour charts. On the 3-hour charts, see base here, retracement, first curve, second curve. Now if you look at the complete movement, you will find, let me draw it for you. You will see this lower highs, lower lows trying to train this channel. $23 certainly going to remain a very good support. Stochastic looking down, MACD is still trading with a slight bearish bias. RSI is almost flat and trading with a negative slope here. Look at the 4-hour charts. On the 4-hour charts also, with the resistance at 2360 levels, we can see after getting the resistance there is the downward journey. Also look at the couple of consolidation candles. Now possibly 2330, 2320 levels can be expected. Below that, more bearishness. Stochastic looking down, MACD is still bearish. RSI is also looking down here, trading with a negative slope. Now look at the daily charts. Now see, on the daily charts, first of all, look at the previous candle. Right now, this candle is turning bearish. However, look at the previous candle. The body size is very small here and the candle size, the shadow size is very long. This is indicative that prices fail to stay bearish and there could be a pullback. Now that could replicate again here if it stays above 2360. You can say we may see a complete reversal which might in fact take it till towards 2370-80 levels. Now till the time, by the way, till the time it stays below 2340, there could be increased bearishness which is going to take it till towards 2330, 2320 levels. Stochastic looking down here, MACD is still bearish, RSI is almost at bottom. Considering this, sell at 40, buy at 60. In between these 20 cents, do not take a trade. On the downside, till 2310, we have to put a 10 cents trailing stop loss. In fact, 23 and 2280 are also very good support levels, and hence just 10 cents trading stop loss. It is good enough to book little profits and re-enter. On the upside, you can buy here at 2360 and expect it to rise. 2370, 2380, these two levels you should watch out for. In fact, till $24 levels, put a 10 cents trailing stop loss. Beyond that, we may see 2420, 2450 levels. Take your trades accordingly. Trade with a stop loss, trade with a trailing stop loss. Do not forget to like, share, subscribe and comment. Join my mentorship by Join My Signals channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.